You are already knowing what it is. Come on, because we are back once again with them holiday woo trades. It's been a while. It's been a while. We had a rough couple weeks on the business front. But I am back looking at this all-time high run on NASDAQ. To me, it's been fairly simple. I mean, as I always say, you look at your imbalance structure and you see how price is treating your imbalanced structure and your lows. So we've just been seeing the same thing over and over, and it's just expected. I don't think, a lot of this is damn near, to me, not even worth, having to update. But I think what I'm seeing is, and what I have also fallen into at certain points, is eyeballing the downside, realizing that there is so much more room to the downside, right? What you would think is a lot of profitable room to the downside. Because if you could just put in a short, and this is how I used to think, but until I understood imbalances and lows and how they should be loaded, until the macro changes, and the macro changing signal is a distinct daily close below a daily candle, preferably below a bullish candle. That's when the macro changes. So whenever the macro remains the same, which is it failing to close below daily blocks or daily candles, daily range, you would just expect this, what you're seeing here. And so how I used to think is, oh my goodness, if I could just catch a short, if I could catch, it would be something like this. This is where I would have probably tried to catch it from here, because this was a nice sweep. This would have been where, like, for instance, back, years back, probably 2 years, maybe even a year ago, I may have tried to do this. But my extensive studies on especially macro bull runs in gold, Bitcoin, appreciating assets, NASDAQ, and appreciating assets are heaven bound. They don't owe any allegiance to the sell side. And it's only because people are actively, I would say 70% of traders forget that this is an investor's market. It is not a trader's market. Even the hedge funds and the big guys, their shorts are to cover contingencies against loss of their invested positions, which are longs. That's why they're called long, because it's literally because it's a psychological long hold. That's why a long is called a long. A short is supposed to be something that you do to hedge your losses. You're not even your losses, your percentage against your gains, basically. So if price begins to eat into your gains, then you consider shorting or short scalping, I would say, hedging short against your long. And so with that being the idea of appreciating markets, traders often forget that it's not an equal up and down market. And I don't think shit should have to be stressed enough, but I know how psychology works because I've been there. I've been trying to catch this right here. This is an engulfing short, an engulfing bar, and a bearish engulfing. And I would enter, right? I would enter short, and then I would put my stop here, or maybe some deviation above it, which it would have gotten hit, obviously, because all the stops that are deviations above it, but it would just use these right here as this coming above this. That's what you see. It accelerates when it hits those stops, and then it's able to just keep going for a period. And that's what that is, that deviation run there. But I would have tried to target this. I wouldn't even try to target like a crazy sell side, like all of this. Like, to me, this all could be targeted, especially to this previous all-time high level here. I feel like could be targeted this low and maybe even this low. There's not much imbalance here. Maybe someone might try to target this imbalance at some point if we were to like close below this, and then we could target this, and that. But digressing off of that, I would have only tried to target here. Lo and behold, stop would have been hit. Even if I moved my stop thinking that it would have hit this and then came back down into the range after BOS, and then you get fib retrace, which did happen here. I would have been moving my stop, and then I would have seen this black bar right here and been like, okay, I would have probably tried to enter another position to cover this because it's all technicals, right? We're traders. And that's what we do. We bet on things. And so previously that would have been me. So I know that. I know that psychology very well. And so spend the last 5 minutes talking about that because that's the reason, I guess, why I would do an update here is to combat that psychology. I wish I could like put ad money behind this post so it would actually go somewhere. Hopefully maybe the devs or somebody will pick this up and appreciate what I'm putting down like they have previously. But pretty much with that being said, what we have here is just the continuing of the bullish cycle using bearish levels, using a sell side level as a stop hunt. And so when you have this bullish cycle or mega cycle, as it is, and it happened because we dipped so far down and we mitigated the last year's high. So when you are able to get those orders out of that higher time frame candle all at once, usually it happens slowly, right? It'll happen slowly. People will be like, oh, it's a bear market, it's a bear market. Trump is really good at this. These guys, the Fed and Powell, they're really good at this. They know the technicals. They know the algorithmic technicals damn near just as well as any trader, plus the macroeconomic cycles that they plan and that they know, they understand. And so with that happening, we were able to mitigate and then come straight back to the all-time high without having to go down again for a sweep or a building or another mitigation. And so that's pretty much what happens. No, this is the wrong thing. That's pretty much what happens in that situation that happened just now with this all-time high run. And so we're just clear. It's just point blank clear for takeoff. And so with that being the case, is what you get here. You get shallow because we don't need. I mean, I was listening to I think it was Chase, it was JP Morgan. It was somebody who said they were expecting another sell side run, but these guys are not traders. These guys are. Their job is to know what may happen. And so when he said that, it kind of like I'm looking at the technicals and I'm like, I could see it. And then someone did say that there was a bearish accumulation on the hedge fund side. And so I did post that. And I did say my forecast was going to go through ATH and then potentially, you're going to get your bearish. We will get possibly, all depending on if they, adhere to this, which usually in late July going into August, some profit taking. It seems like that's been the cyclical profit taking point. Going into August, and going into September, they kind of take a lullaby there. So, with that being said, and that being the case, on these lower time frames, I'm using the 2 hour a lot. I feel like it's a neat chart. The 4 hour is pretty good, but intraday, and you're looking at that 2 hour, it kind of gives you some neat imbalance viewpoints. And I'm using Capital lately. I do have the Pepperstone, but something strange. I've been able to read the imbalances in the order blocks. It seems like it's the way the lows and the highs are playing are a lot cleaner on this chart. So I have switched to capital.com's timing for the 2-4 hour. The hours obviously and the 15 minutes are always going to be the same in the dailies, but something about those 4 hour and 2 hour candles, I guess the way, I don't know, they time it. But anyway, we're about 10 minutes in. I'm going to wrap this up. I just wanted to give you guys a visual. see too much having to be explained here. Besides what I said about, I always say about imbalances. If your imbalances are charged and you do remain bullish, you're going to see things like this, and then you're going to see it take the height again. You're going to see it do a fib and do a retest of the structures below. You're going to sweep lows. You're going to fail to sustain below certain lows due to pooled order flows, obviously, and then boom, you get your engulfing up. Like I said, this capital.com chart is really clean. It wouldn't even look like this on the Pepperstone, but you do have the engulfing right there. After you test, you get your engulfing, and then boom, you get your order block testing. And what? Back to the height. This is a CRT. This is a candle range, CRT high right there. And what happened? Boom, you come back in. You test your what? Your imbalance. Boom, you break the height again. Boom, you come back in. You got your BPR support. And then you come into your lows once again, quickly, sharply, and still fail and still use that support structure in the imbalance here, and then you still break that high. Then once this happened, right, I wasn't forecasting, but I was in the chat in the mines, and then you get your break, right? You get your break, and then you use your imbalance structure and your order block structure and use that as support, right? This is I always say, use your previous bearish candles that got closed over, monitor that for support. Boom, you come up, print another imbalance, and what do you do at that morning time? In that morning time, you use that imbalance, you sweep those lows, sustain above 50% imbalance. Those are some of the best ones right there. If you get that 50% hit, and then boom, what you do, break a structure. And then what do you do on today's session? Going overnight and going into this morning, you get going into from yesterday, you get that drop. Yesterday morning was a doozy because it swept that high, and then that was the trade that did just so happen to be the trade of that morning. So when you get that morning to sweep that like we did, and then you get the range here, and when you get this range here, that could have signified, and then this was your previous measurement here is what I would use for the deviation. This big drop wick, and then your deviation hunt here. So your deviation take profits would be between here and here, and on that morning it just gave that signature, failed to sustain above, and then you don't have an order block. Really too much of an imbalance and an imbalance, and then you basically just do another fib. I mean, this was a fib retrace here. I measured from this low to that high, and then 50% is where you want to consider your buying again. So a hard short, maybe a hard short, because it was zigzagging, and this break of this low was used as the break and retest, or rejection, as I always call it. So your bar rejection did happen from there, and then you got the sweep of the low, CRT movement here, CRT movement here as well. And so boom, and then this morning you got we're just going to wrap it up here. This morning you got this is the last thing that I wanted to show you guys, as I'd like to, boom, you get your what? Your BPR, your balanced price range, right? So once you balance that range right there, you hit, I mean, there's an order block here. This whole thing is a bullish order block at this point. Well, this one really, once it got closed over, then you mitigate, or you close to give these orders an opportunity to close. All these candles will be used as support below this imbalance. So once you clean that imbalance, boom, you hit that imbalance, and then you break the height again. Once you break the height again, and we have one more thing, I like to mark these in real time as I can, and boom, you got your bullish imbalance again. Now, do we expect this to be fully rebalanced? Maybe. We love the full rebalances, because then it shouldn't have to dip anymore after that full correction of that imbalance. And so what I'll do is take this, take that, and then we'll use that break point as a monitor where we would want to see it. Obviously, we ran out of volume at that 50% right there. So what we'll do is This is the low that we'll use, and that is the high we'll use. So all of this kind of is in alignment with the retracement idea, right? So fib golden, 50%. So anywhere below 50% is great buy. You got mitigation block activity here, and then a full correction of the imbalance would be very welcome. There's not too much of a bearish imbalance. We could see a CRT movement here going into tomorrow, where we hit this low, fail to sustain. It doesn't even matter. It may close below this low, but if it fails to sustain below that low, it clears any of this or uses any of these levels. Obviously, the 25% level as well, 25%, 75% of this imbalance can also be used. Again, I've been using the 2-hour chart. 2-hour chart has been really good. I mean, we can take it to the 4-hour if we want a little more solidarity for where the break is still going to be at the same place, and then right clearing that 4-hour imbalance is still going to be somewhat of a similar task right there on this chart as well. So using the 4-hour, this is a bearish engulfing. Some of people will use this bearish engulfing as a shorting position. Again, and once we clear this imbalance, this bearish imbalance, this bearish engulfing don't mean nothing to me. Once we clear this, we want to see how it uses this, because we expect it to come back here. Now, if we come back to the 50% of this area and we get wicking and then we get more bearish after that, if we get another bearish engulfing, then I will say we'll go towards trying to target some of these further imbalances, right? And target some of these further lows, more so clearing some of these further imbalances, because that's where your power will be at. So that's pretty much that in a nutshell for the NASDAQ. We almost went 20 minutes, a little bit longer than I like to go, but there's some psychology as well, along with the technicals here for this all-time high. Probably name this navigating all-time highs, right? Something like that. Because that's what a lot of people get skittish at all-time highs and just start, we need to short. You see, like, even a lot of the real good guys, they'll I'm short here, we're in a premium. Your premium is only as much as your last extension. So like here, this is our last extension. Yes, we do exist in this premium, but once you correct an imbalance, bro, you're free to go again. So that's pretty much where that goes, and that's pretty much what it is. I'm gonna go ahead and clock out on this one and let this one upload. We're gonna try to cover gold maybe on this one for the week getting started. It is a Monday, and things are getting spicy. Be sure to like and comment. If you haven't already subscribed, go ahead and subscribe. Share this with a friend. Hollywood clocking out.